Yesterday, I showed you Wall Street's top 10 AI stocks based on their projection of increase or target price between now and 12 to 18 months. And I showed you this list, and then I gave you a representation of how many analysts were involved in these projections, and then I showed it relative to Apple, Amazon, and NVIDIA. Now what I want to do is the same thing, but what I want to show you is based on their projected earnings per share in 2028, what their price will be on January the 1st of 2028. Now, I get this information, their earnings per share projections, again from Wall Street. These are not my projections. These are the projections that are provided through the data that we're able to attain over the internet as a result of Wall Street's projections. Now, the other thing that I had to do was, I felt, level the playing field, and that is to say, based on their projected earnings per share in 2028, if they all had the same PE ratio of 25, which is the average PE ratio for the S&P 500 over the last 20 years, how would they compare? Whose price would increase the most based on a 25% or a 25 PE ratio in their projected earnings in 2028? So it's a level playing field, and it gives you another metric from which you can manage your portfolio based on the projected earnings growth if they all had the same PE ratio. So let's go, and I'll take you to my tell sheet. This is on my website. I update it on a regular basis. I just did the update on projected earnings on all 60 of the stocks, and I want you to see who the winners are so you can make better investment decisions. Let's go to my computer. Okay, yesterday I showed you my tell sheet, and I explained to you how I used Wall Street's projections of what the price of the stock is going to be, their target price, and then compared it to their current price. And as you see in Apple, the current price is $246, and they are projecting its target price at $250. So that is saying it's going to go up 1.52% in the next 12 to 18 months. I did that on every stock, and then I showed you a ranking as to who is going to get the biggest increase in price over the next 12 to 18 months, and it turned out to be IREN with an 82% increase. And this is not my projections. These are the Wall Street analyst projections. And in yesterday's video, I explained how many analysts came into putting this number together. What I want to show you today is another metric that I use, and that is based on what their earnings are going to be, earnings per share in 2025, and what their gain would be if all of them had a PE ratio of 25. Now, as you can see, Apple has a PE ratio of 32, and ASML has a PE ratio of 12.68. So the variance in the price will be affected not only by the increase in the earnings, but by decreasing Apple's PE ratio from 32 to 25 and increasing ASML's PE ratio from 12.68 to 25. And so there are two elements that come into what is the gain that they're going to have. Essence says, or it says that Apple will gain 16% between now and 2028 if their PE ratio were 25, and ASML will gain 358% between now and 2025 if their PE ratio was 25. So what I'm doing is leveling the playing field and taking the market out who assigns the PE ratio and making it a total financial decision. And so you can see again, if here we're looking at AC MR, again a PE ratio of 11.48. So with their increase in earnings to $3 and we increase their PE to 25, they end up being the 7th best stock of the 60 stocks that I follow relative to the growth in the area of AI, which means data centers, software, hardware, and then delivery of that AI to the individual investors. So you can see what I've done then is rank them accordingly. Now you'll see there are other metrics that I have created. And what I do is then assign a value to each of these metrics from 10% to 40%. And then that comes up with what is its overall ranking based on these specific areas of comparison that I have created. Now, the other thing that I offer to my tribe is if you don't know what ACML does or ACLS does, you click here and that will take you to a podcast where it will explain to you exactly what they do. And then I also alter it, and when they come out with their earnings, I will do a briefing. As you can see, I did an Apple briefing on 2/2/25. This is basically a written version of the podcast. So you could literally come here, and as I create the written versions, you could create a library in a binder of printed materials that tells you exactly what each one of the stocks do. Now, you can also take this as a member of the tribe and reduce it in size and add that to your library. Now, what I do is at least once a quarter, I come through and change these numbers based on the data that I'm able to gather. So what I do is I go to Apple on Seeking Alpha, I go to their earnings, and I go to earnings revisions, and it tells me right here what their projected earnings from Wall Street are from 2005 through actually 2033. I'm pulling the number from 2028 because I want to know what the price of this Apple is going to be based on its earnings at a PE ratio of 25. To compare it to all the other stocks I match with a PE ratio of 25, and that gives me a relative growth of Apple over that period of time. Now you can see they also here give me a projection of what their revenues are going to be from 25 to 33. So this serves as a means for me to measure the stocks compared to each other and relative to each other. And then, as I say, I assign a factor or created an algorithm that takes all of these varying factors, weighs them, and comes up with the rankings on my stock. Then what I do is bring that over here and say, okay, based on what I've got right now, these are the shares I own in each of these stocks, but based on the data that changes on a regular basis, how many shares do I want in my portfolio in 2028? So this becomes a management tool for me, not just this is what I'm going to buy and hold. No, I manage it on a weekly, monthly, quarterly basis so that I can anticipate any changes that occur. Such as just today, I was notified that APLD just took out a loan that is going to change their situation. And so let's look at it and see. This is their balance sheet. I look at their balance sheet and I see that since May 2024 to their last reporting, their long-term debt has gone from $79 million to $468 million. Now, to my way of thinking, I would say that means they have diluted their share, or they have taken on a tremendous amount of debt. And then the next thing I want to know, how has that affected their outstanding shares? And as you can see, they increased their outstanding shares by roughly, what is that, some 70 million shares. This gives me then a means by which I can judge, is this a stock I want to own that has basically diluted their shares by 40% and since May of 2024, and is that reflected in their price? So that's what I do and how I use my tell sheet and how I update my tell sheet on a regular basis in each of these categories so that I can make a better investment decision. To give you an idea, just today I went through to change what their earnings per share, to update their earnings per share in 2028. And so I had to change every one of these numbers. That took me about an hour to do that. Now, if you want to do that, just go and copy this, and then you do the same thing. And you can have exactly what I have, or you can pay me $19.95 per month, and I'll do it for you, and then you can manage your portfolio however you want to. This is how I manage my portfolio. I suggest you come up with some means by which to educate yourself and learn, particularly here, what is it you own? What does ACML do? What does Box do? What does INOD? A company whose price just skyrocketed. Why? That's what you need to know so you can make better investment decisions.